Tax time rolls around and you hit the same wall every year. Do I need a receipt for this? Can I just use my bank statement? And what about that $300 thing everyone talks about? Here is the problem. Most people either throw away records they needed or they claim things they cannot prove if the ATO ever asks. Both of those mistakes cost you money. So today I am going to walk you through the ATO 3 rules for deductions, exactly what counts as proof, and the simple checklist you can run before you lodge in 2026. Let us start with the one thing everything hangs on. The ATO has a 3-part rule, and a deduction has to pass all 3. 1. You spent the money yourself and were not reimbursed. 2. The expense directly relates to earning your income. And 3. You have a record to prove it. That last one is where almost everyone trips up. No record usually means no deduction. Keep those 3 in your head for the rest of this video because every step comes back to them. Before the steps, let me show you the stakes, because this is where the real money leak happens. The ATO rule is that a deduction needs proof, usually a receipt, an invoice, or an equivalent record. If you just say, I think I spent around $200 on stationery, that is not a record. It is a guess. And if the ATO asks you to back it up, and you cannot, they can disallow the deduction completely. Here is the part people miss. A bank transaction on its own is weaker than a receipt because the statement shows that a payment happened but not what you actually bought. For someone like Mia, a marketing coordinator in Sydney with around $1,200 of work expenses a year, that gap can quietly cost hundreds of dollars across a single return. Records are not paperwork for the sake of it. They are the only thing standing between you and a denied claim. Okay, step 1. Open the ATO Claiming Deductions page. You can search ATO How to Claim Deductions and it is the first result. Now take your list of work expenses and run each one through the 3 rules. Did you pay for it yourself and you were not paid back? Does it directly relate to how you earn your income? And do you have a record to prove it? Go item by item. For each expense that passes the first 2 but fails the third, flag it. That is your missing proof pile, and we will deal with it in the next steps. The goal here is simple. Every claim should have a clear link to your income and a record behind it. Now the famous $300 rule, because this is misunderstood more than anything else in Australian tax. If your total work-related expenses for the year are $300 or less, the ATO says you may not need written evidence like receipts. But read that carefully. It is not a free $300. You still have to have actually spent the money, and you still have to be able to explain how you worked out the claim. It applies to your total work-related expenses, not $300 per item. And the moment you go over $300 for the year, the normal substantiation rules kick in for the lot. So treat this as a small mercy, not a loophole. Step 2. Sort your expenses by amount and by type. First, add up your total work-related expenses for the year. If the whole lot comes in at $300 or under, you're in small claims territory and the written evidence requirement is lighter, though you still need to be able to explain it. If you're over $300, everything needs proper substantiation. Then separate out the special categories because car expenses, working from home costs, and low-value items each have their own record-keeping rules. This sorting step takes 10 minutes and it tells you exactly how much evidence you need to chase down. Step 3. Match each expense to the right kind of proof. A receipt or a tax invoice is your gold standard because it shows what you bought, when, how much, and from where. For expenses where you genuinely do not have a receipt, the ATO may still accept other evidence like diary notes, digital order confirmations, emails, or a logbook for car travel, but only if those records actually substantiate the expense. The test the ATO applies is whether you can explain what you bought, when, for how much, and why it was work-related. If your evidence answers all 4 of those, it is strong. If it only proves a payment happened, it is weak. Step 4. Save a digital copy of every acceptable record as you go. Paper receipts fade, get lost, or end up in the wash, and a faded receipt is the same as no receipt. So photograph or scan each one and store it in a folder by income year. Use the ATO My Deductions tool in the ATO app if you want it all in one place because it lets you snap receipts and log expenses throughout the year. The reason this matters long term is that the ATO requires records to support each year you claim. So missing records do not just hurt one return, they compound across multiple years of missed or denied deductions. Step 5, and do not skip this one. Before you lodge, open the ATO page called What is New for Individuals. Rules and thresholds can change between tax years, and the page you read last year might not apply this year. Confirm the income year you are actually claiming for. Check whether any deduction rules have shifted, and update your records if needed. One change worth knowing about: the ATO says a proposed $1,000 standard instant tax deduction applies from the 2026 to 27 year, but it is not yet law. So do not bank on it until it is confirmed. The principle is simple. No claim should depend on a rule you have not verified for the correct tax year. Now, the two mistakes that cost people the most. The first one is the myth that a bank statement is always enough. It is not. The ATO rule is that you need a record to prove the expense, and a bank statement alone may not show what you actually purchased. A line that says $40 at an office store does not prove the $40 was a work item rather than a birthday card. So if a receipt is missing, pair your statement with a clear description of what was bought and why it relates to your work. Better still, keep the actual receipt wherever you can. The statement is a backstop, not the main evidence. The second big mistake is misreading the $300 rule, and it cuts both ways. Some people assume no receipt means no problem, so they overclaim and assume they will be fine. If the ATO reviews it, that deduction can be denied or adjusted, and you pay it back. Other people swing the opposite way. They assume that without a perfect receipt, they cannot claim anything, so they underclaim and leave legitimate money on the table. Both of those are a cash cost. The $300 threshold is a specific small claims exception, not a blanket allowance, and it is separate from the general rule that big claims need full proof. Understand the difference, and you stop losing money in both directions. Let us recap the whole thing fast. 1. Run every expense through the 3 ATO rules. You paid it, it relates to your income, and you can prove it. 2. Sort your expenses by amount and type so you know what falls under the $300 line. 3. Match each item to the right proof, with receipts as your strongest evidence. 4. Save a digital copy of every record, sorted by income year. And 5. Check the ATO. What is new page for any rule changes before you lodge. Do those 5 and your return is built on records, not guesses. If this cleared up the receipt question for you, do me a favour and subscribe, because I break down one Australian money rule like this every week in plain English. Next up, I am walking through exactly how to claim working from home expenses in 2026, including the fixed rate versus actual cost method and which records you need for each. Get your records sorted now while it is fresh, and you will thank yourself at lodgement. Thanks for watching, and I will see you in the next one.